And we start off with Chevron, the stock jumping nearly 5% today after the company announced a stock buyback plan totaling a whopping $75 billion, or roughly 20% of outstanding shares. But the massive buyback plan and a hike to Chevron's dividend drawing scrutiny from the White House. For more on D.C.'s response, let's bring in Kayla Tausche. Kayla.
Well, Melissa, the administration believes it should be deploying its capital to drill more and lower prices at the pump. A White House official saying for a company that claimed not too long ago that it was working hard to increase oil production, handing out $75 billion to executives and wealthy shareholders sure is an odd way to show it. It's just the latest in a long-running spat between the White House and big oil, a popular punching bag, according to polls. Chevron CEO Mike Wirth asked the administration in June for a detente and a change in approach. President Biden responded by calling out Wirth personally and saying, "I didn't know they'd get their feelings hurt that quickly." 2 months later, President Biden signed into law a sweeping bill that included a 1% tax on stock buybacks, meant to chill that spending and spur investment elsewhere. But for Chevron, expected to notch a nearly record $37 billion in profit when it reports tomorrow, that 1% tax bill looks like a rounding error. Of course, Biden administration employees with investments in the Dow or the S&P 500 are invested in Chevron. So I asked the White House if that changed their outlook at all, and the official told me no. Melissa?
Kayla, thank you. Kayla Tausche from the White House for us. I don't even know where to start with this situation. Guy, we had a conversation about this on the phone. All of you guys, I think, had very strong opinions about this. Where do you start when you think about the White House attacking oil companies for spending $75 billion on their executives and wealthy shareholders?
Executives, who writes this stuff? I mean, these are people that work in the administration, right? I mean, theoretically, they're intelligent people. I mean, wealthy shareholders. There are a lot of, I'm sure, shareholders that don't consider themselves wealthy. And why are we demonizing success? I mean, when did that become a thing? By the way, this is an industry, the energy industry, that this administration basically said they were going to put out of business if they were elected. So what should they be doing? By the way, when the energy, and I'm not an apologist for the energy company, let's just be straight about that. But when they were doing poorly for decades, nobody went to their defense at all. So now that they finally have things working, finally, when for the first time in the lifetime of these companies, when they're running more efficiently, their balance sheet is as best they've ever been, they actually are the poster childs for ESG, a lot of these companies, in terms of getting up to speed. Why then do they put out a release like? I would be championing this. You know what? Good for Chevron that they've run their business in a way that they can give back money to shareholders and buy back their stock. We wish they were exploring a little bit more, maybe drilling a little bit more, but this is a great example of American ingenuity being put to work.
I agree with everything Guy's saying. Just to expand on that a little bit, I mean, we talk about the boom and bust cycle in this space, right? And so finally, they're getting it right, as if there's no cost to boom and bust. All those people who are hired and then fired, all those housing, the housing that's built for them.
The debt crisis around the energy industry.
Everything around that. And now they're being financially, I think, way more disciplined, as they should be. The wealthy shareholders, how about just the shareholders, right? They don't just go to wealthy people and say, we'll buy your stock back. No, this is for all the shareholders. You don't need to sell your stock if you don't want to. So they've been just, demonized when they produce. Now they're demonized that they don't produce enough. I just think it's not fair of the administration to just make them into a punching bag, because it doesn't serve the administration well to have oil prices move.
Yeah, just real quickly, when you think about stock ownership here in the U.S., it is largely among the wealthy. And so, for all intents and purposes, you could say it's semantics, but when you deploy that much of your cash flow that has increased dramatically because of a weird supply-demand dynamic on the other side of a black swan event, all this sort of stuff. I mean, the talking points make sense. It's populist, right? What are they trying to do? They're trying to battle this narrative of inflation. And where did most U.S. consumers feel it? They felt it at the pump. Where did most U.S. consumers feel it the worst? On the lower end. Those are people who don't own stocks, right? So, again, I mean, we can sit here and argue about it. I get what you guys are saying about demonizing, capitalism and success in capitalism. I don't think that's what we're doing. Look at almost every industry that has a difficult time in a difficult economic environment in our country, in my lifetime. They get support from the government, okay? That's kind of the point. And then it's not just Democrats in the White House right now who feel that, fossil fuels are not the way forward. I think there's a lot of people who agree with that. So again, I mean, I know companies like Chevron, they're using their technological know-how to invest in away from fossil fuels. It's just an easy target, right? They didn't need to come out and say $75 billion. This is a company with a $300 billion market cap and $25 billion in cash. Yes, they generate a lot of cash flow in periods like this. But again, I think it's kind of silly on both sides. It seems like a little bit of a tip for tat.
It's out of line, I guess is the word I would use. But here's the question. The recipient of that poke, should they even respond? That's the biggest question. I mean, they don't have an obligation, any energy company, to respond to that kind of thing. I suspect they will. But at the end of the day, it's a perfectly valid thing to say, hey, that's your opinion. We're not going to respond to that.
Well, here's the question, I guess, for investors, and that is, does that change how the stock is viewed in terms of being investable or not investable if it has a constant target on its back by an administration that is running out of cards to bring gas prices lower? Gas prices have ticked higher. They've already released a lot of oil from the SPR. What else is there to do from the administration standpoint? I'm not trying to play politics either, but maybe that could factor into why this attack happened.
Yeah, so the answer, in my opinion, the answer to that question is absolutely not. I mean, these stocks were probably, in many of these stocks, were half the price that they were when the administration came in on the back of, we're going to put you out of business. They have doubled since. Many of these companies are still, in my opinion, cheap on valuation, regardless whether or not crude oil goes higher or lower from here. If crude were to go sideways for the next year, these companies should continue to go up in stock price, in my opinion. So if you're selling your stock because you're scared that the administrations have a bullseye, that's the wrong reason. If you think they've run too much, it's an entirely different conversation.
Let me just ask you a question. What do you think is worse, them knowing what they're saying is kind of a load of crap,
right,
or they really believe it? From the administration,
really believe it.
That they really believe it.
They really believe that. What's your opinion on that?
I'm not really sure. I mean,
it's bad either way.
It's bad either way. I mean,
yeah.
Dan's point is they're just playing politics. They're just saying what they got to say.
Sure.
I guess I'd rather that, but knowing that they really do understand the dynamics of the business.
So let's just talk about the stocks here. Okay, so they're trading at all-time highs, right? And so when you think back to what Guy was saying when the administration came in, go back to the Trump administration. Chevron was earning like $3 in earnings in 2017, and now it's expected to do $20 this year. I'm not sure it gets any better from here. I'm not sure if you're going out and you're buying the stock right here because you think the valuation is cheap. You think maybe the narrative has changed as it relates to ESG and the companies are going to be able to do what they want with their cash flows. That's fine and good, but I'm not sure these stocks get any better from here. I'm not sure the companies do. And Guy, to your point, we don't know how these stocks are going to perform with $60 oil or $50 oil in 3 years or something like that. So to me, again, this seems like it's ringing the bell at the top.
For more on all of this, let's bring in Halima Croft, Managing Director and Head of Global Commodity Strategy at RBC Capital Markets and a CNBC contributor. Halima, great to have you with us. It's interesting this is all happening as we're seeing oil prices go higher and perhaps even head higher from where we are now because of China's reopening. What are your thoughts on all of this?
I mean, this is happening precisely because oil prices are rising. This speaks to the administration's anxiety with this China reopening that we're going to be talking about oil prices back in the 90s. They've already done, big blockbuster SPR releases. And the question is, do they have any more levers that they can pull to try to bring down prices? I think this is all about signaling intention to try to deal with higher energy prices, but they don't have a lot of great options right now.
So where do you think oil prices go from here?
I mean, this is the big question. I mean, if China proceeds as planned with this reopening, I mean, that is the obvious tailwind for oil prices. And again, I think, we're talking about, oil prices in the 90s, potentially in the hundreds later on this year, if China proceeds with this reopening. I mean, that is the bull story for oil. Indian demand is growing like gangbusters. If we fade the global recession story and focus on the China story, there's not a lot of additional supply out there if China is fully back on the market.
Salima, Karen, thanks for coming on. Let me just ask you, there was some discussion a couple of months ago about the administration sort of re-upping with the SPR, and there was that, $70 bid. Whatever happened with that? It did seem like they bought nothing. Where does that stand?
I mean, they talked about sort of a trial repurchase of around 3 million barrels. There is still a 26 million barrel release on the books for this year, congressionally mandated, but there has not been a lot of color about when the administration would buy back, what the quantities would be. So this administration pledge to refill the SPR has not been taken that seriously by the market.
So, Halima, I mean, it sounds like you were saying before that the administration really has no way at this point. And it almost feels like them pointing the finger at Chevron and the other oil companies, them trying to go to OPEC and trying to get them to produce more, but them ultimately being turned down. I mean, it just sort of underscores the notion that the administration really can't do anything about this situation.
I mean, again, I think the administration is trying to use whatever tools it has at its disposal. So, yes, it's appealing to U.S. producers to basically, hey, put the money in the ground and produce more. But that's not going to solve an immediate issue if we do have China proceeding with this reopening. Again, they can appeal to OPEC, but OPEC has said, or a lot of the OPEC producers have said, we have our own fiscal priorities. Like, we would like a more robust oil price. So again, I think the administration is sort of scrambling for what they can do to try to show U.S. consumers that they have a plan to bring prices down.
Yeah, it's interesting, Halima. You can speak this far more intelligently than I, but I don't think there's been a new refinery built in this country in decades. So this is not something where instead of that $75 billion buying back stock, we're going to start refining more or doing things that are going to lower. I mean, it just doesn't work that way. To Karen's earlier point, either they don't know it and they're not that bright, or they do know it and they're being disingenuous.
I think they do understand the situation. Again, I think there are some in the administration who believe you can turn it like a light switch. But seriously, someone like an Amos Hochstein clearly knows the environment that he is dealing in terms of this market right now. But you raise a really interesting point when you talk about refined products and lack of refinery capacity. Pay attention to February 5. That's when Europe bans the importation of Russian products. And I would pay close attention to what happens for diesel, for refined products, after February 5. That's a very important inflection point in the market that's coming up.
Halima, great to get your thoughts. Thank you.
Thank you.
Halima Croft, RBC, Carter Braxton Worth. How do the charts look?
Well, I'm with you, Dan, in the sense that we know energy has been a great performer off the pandemic low, but its relative performance has stalled. I like the OIH, the drillers' names relative to the big integrateds, but at this point, this is what I would call a pair of twos. It's not all that interesting or actionable.
Yeah, finally, the OAH, and Karen's been on this, has caught a bid. I mean, the fact that it's making 52-week highs, those stocks that comprise of Schlumberger, Halliburton, to a lesser extent Baker Hughes, 50% of the ETF, all extraordinarily reasonable on valuation. And again, all companies that are much better companies today than they were 5, 6, 7 years ago. It stands to reason, again, crude oil notwithstanding, these stocks should just, in my opinion, levitate higher. And if you think the Chevron quarter, tomorrow's report, is going to create a firestorm, wait until you hear what Valero has to say as well, because the refiners are going to crush it in this environment.
I can't wait to hear what Mike Wirth says about these comments from the White House. Coming up, the earnings keep rolling in. Shares of Intel and Visa on the move after reporting results. We'll dig into those numbers next. Plus, no love for LUV, for love. Shares of Southwest losing altitude after a big earnings miss. Is there more turbulence ahead? The details when Fast Money returns.